Hello and welcome to my money vlog update for the month of December 2021. That means another year is almost over. In fact, I'm about to get ready for my New Year's Eve festivities, but I just wanted to make a really quick update on the stocks that I bought this month and also be so bold as to make a few predictions about the next year, about 2022, and some plans what I want to do with my portfolio next year. Okay, so remember that last time I got this amazing check from HMRC. I paid too much tax, and for some reason, without me doing anything, they gave me £1,500. I decided to put all of this into the stock market, and I bought two different companies for about £750 each. The first one is a German company called Beiersdorf, and I bought 10 shares for a price of €87.90, and with commission and all of this, in the end I paid £771.25 for this. The second stock I bought is called Fresnillo. That's a precious mining, especially silver company, and I bought 85 shares of this for a share price of £8.88, easy to remember, 888, for a total of, I don't actually know, so roughly £750 or something like this as well. In any case, I spent the entire money and maybe a little bit more that I got as my tax return, and since I don't really need it right now, just put it all into the stock market. The first company I bought, Beiersdorf, is predominantly known for one brand, namely Nivea. And I just rummaged through my bathroom to see what I use. And I have this Nivea shampoo. I also use their shaving foam and post-shave balm. And I'm sure I have some other stuff from Nivea in my house, so I've used it before. And I just think it's sort of a staple consumer product that everybody would use. And especially thinking about inflation, I think this is the kind of product that has pricing power. So Nivea could decide to raise prices for these products and people would still buy them, because we always need shampoo and shaving foam and stuff like this, and they're quite cheap at the moment. So if instead of £1.50 you pay £2 for it, then I think people would still buy it. Maybe they lose some market share, but all in all, I think this is a good stock to own if, like me, you think inflation will be high in the next year. Even though the dividend isn't very high, I conceptualize this stock as part of my dividend portfolio. And that's because it's very, very stable. And that's really what I want. I want some security. And they have paid consistently a dividend of 70 cents per year and have adjusted the payout ratio over time to keep it stable. So for instance, in 2019, they made €3.17 per share, and that's 22% went into dividends. Or in 2020, it went up to 28%, but again, the 70 cents dividend was secure. And I have faith, I guess, that this is going to stay like this, and that this dividend from this particular stock, even though it's not very high, is very safe. That's also reflected, I think, in the share price, which you can see here over the last 5 years. And it's not really going anywhere. It just hovers around 80 to 110 euros, and it sort of stays within this margin. So I'm not really expecting to make money on this stock, but I keep it for a very, very long time and just have, no headaches and steadily collect those dividends. Their annual report will come out March 1st, and then the first quarter statement 28th of April. That's also around the time where I will collect the dividend, and then the quarterly statement for the third quarter comes out October 27th. So by that time, we will know more if this kind of stock was a good investment or not. I don't want any surprises. Just supposed to do their job. Earn your money, pay my dividend, and promise me that it will stay like that. That's what I want to get out of that stock. And overall, people think it's solid company. Here from marketscreener.com, I found this consensus overview with the majority basically just saying hold the stock. So slightly positive, 6.3 out of 10 on 8K from sale to buy. The other company I bought, Fresnillo, that's directly part of my precious metals mining portfolio. Pretty straightforward. It's an operator of gold and silver mines. They provide mining and exploration services, and they're listed in London, so here in the United Kingdom, and they serve customers in Mexico and in the United Kingdom. And this is how the share price has developed this year. So pretty bad, £12.50 to a low of under £7.50. So pretty low, and it's down about 30% this year, which frankly I think is astonishing. We have so much inflation, gold and silver should be much, much higher, yet people just throw away these precious metals miners. I don't really understand it. It has a PE ratio now of about 10. And I am back. I just got dressed for New Year's Eve. 2022 will begin in less than 1 hour, and I'm off soon to meet my friends and have the big countdown to the new year. So I need to hurry up and basically finish this episode in the old year. So first of all, here is a current summary of my portfolio and a history of how it has been developing.
My portfolio now consists of 22 individual holdings with a total value of £16,863. I'm still down by about 13%, but that's a huge improvement, I think, over the beginning of the month when I was down by 17%. So I would say overall, I'm moving in the right direction.
All right, then next, I have a few notes here about my predictions for the new year. And then at the end, today in a year, I can compare and see if I was sort of right or wrong. Starting with the gold price, I would see the gold price roughly where it is now, 1800 to maybe as high as 2200. So sort of a $400 span. I think it's going to go up in 2022 because of higher inflation. That's sort of the dominant motive behind my investments. And my opinion is that it's rather higher on this end. So say towards 2,200 would be my point estimates, with this sort of range to 1,800 to 2,200, maybe 2,300. Okay, how about a 10-year treasury yield? I would predict 1.75% to 2.25%, so substantially higher than now, 0.5% higher, but still relatively low overall. And then maybe 2023, this is where potentially perhaps it could go much higher. I would also say that 2022 is the year where some of this mania that I perceive is going to stop. In particular, the super high valuations that you find for, the FANG stocks in the S&P 500. I think SpaceX could go bankrupt or be on the verge of bankruptcy. These cryptocurrencies, I think, will come down in 2022, as well as high-flying stocks like Tesla and others. So I think we're going to see the peak of the recent craziness that we had because of very low interest rates. So I think interest rates are going to go higher. So in the second half, say May, June, July, they're going to raise them and then raise them relatively high to say 1%. And that's perhaps as high as they can go, because what would happen if rates go up, right? So here's a sort of a list that I came up with. Well, mortgages for housing would go up, housing prices would be affected. Fewer people could or would buy houses, so housing prices go down. And that is very bad for an economy like the UK or the US that needs housing so much for construction spending, for spending on housing, furniture, gardening, and all of this. And then you could have sort of a spiral, right? You could go into a recession. But also, obviously, very, very high government debt. How are they going to finance their debts with just even 1-2%, let alone 5%? And if inflation is 5, 6, 7%, this is where, in principle, interest rates would have to go. Also, pension funds, like my own pension fund, depend on the stock market. So higher interest rates would be bad for stocks. They would come down, especially these high-flying stocks that don't have any real, substantial earnings. And also, I think what you would see is losses for bonds themselves. So if the Fed has all of its bonds on the books and suddenly interest rates are higher, then these bonds aren't actually worth as much as people think. Who is going to buy a US bond for 1 or 2% if inflation is 5 or 6 or 7%? So then interest rates would have to go up, and that would bring those many bonds for 1 or 2% down in value. And if they mark them down honestly in their books, that is very bad. That would be huge losses. So all of this means interest rates can't go up. Interest rates won't go up very high. And that's, I think, the realization in the second half of 2022. People realize, hold on a minute, we did tapering, we raised interest rates maybe to 0.5%, 1%. But now, bad things are happening in the housing market, in the bond market, with government debt and many other things. Maybe we shouldn't raise interest rates anymore, but inflation is still 3, 4, 5%. And that's, I think, when all of my investments, especially my precious mining stocks, will go much higher to a price of maybe $2,400 per ounce of gold. So yeah, I don't know. Those are all the predictions that I can think of off the top of my head. It's not very structured. It's not very clear, but that's because I don't have a lot of time. That's it for today. I am very much looking forward to the next year, to 2022, and putting more money into the stock market or in other investments. I think in the long run, this is a good idea. And at any rate, I'm having fun with it. So Happy New Year, party hard tonight, and I will see you in 2022.